Good morning. Welcome Beyond SEAF Model. I'm Jack Kosar. This is effective for the week of March 23rd, 2026. Let's get started. SEAF signals for this week. We retain energies and utilities, and we pick up real estate for technology. I'm going to highlight a little bit here what's going on in terms of kind of the flipping of real estate and technology. Also, just wanted a key to note, this data is all through Thursday of last week. So we do not encompass Friday, which utilities took a little bit of a hit, or currently the market is up about 2%, and we have not taken that into account in this data. So there were just kind of a quick highlight of how the SEAF model works. We track the asset flows through the end of the week, and the data, grab the data when we can, but the data is through Thursday. As you can see, 3/19/2026 here. So that's kind of how we set these things up. We stay really consistent in terms of how we process this, kind of like a machine. We process it the same way every time. So if there's new news over the weekend, as per what's going on geopolitically that is not captured in the current data, and we will not be necessarily discussing that. I am going to highlight a little bit with energy, just to kind of reiterate what I've been talking about in terms of especially standard deviation and oil prices. But overall, this is not going to encompass anything that happened on Friday or over the weekend. Heading into our overall rankings here, energy remains at our top spot. A little bit of a step back here on the trading week, going 2 instead of 1. Still overall ranking of 4, which is relatively strong. As I mentioned, utilities took a little bit of a header on Friday, so this data isn't encompassing, but this 3, and I'll highlight this in the heat map, this 3 is a little bit of a not a misnomer per se, but there's some context to the overall 3 score here. Real estate, again, flipping here with technology, with that overall score of 15, not super strong, and again, technology being still kind of weighted down here by that strategic quarter, but still not a very strong number here on the trading week in terms of overall 4. Financials comes off the bottom with that ranking of 1. We'll see a little bit later in the rainbow chart what that means. And communication services is our new bottom here with the overall score of 11 on the trading week, overall score of 28. Next, heading into our heat map. So wanting to highlight here, again, showing financials coming in at 1. That's 0.48% on the trading week. That's a pretty significant move for financials. Now, financials was very much buried with tactical month and strategic quarter in terms of really getting that accumulation to outflows. So financials has some work to do before it moves higher up the board. Number 2 is energy at 0.4. So 0.4 is our significant number. So still a nice inflow into energy through Thursday of last week. Just to highlight though here, 3 through 8, all really pretty tight and near zero. So utilities at 0.07%, real estate 0.04, and technology 0.06. Really tight here. So really all we're seeing a lot is money flowing into financials and energy on the trading week, and flowing out of healthcare and communications in consumer staples on the trading week as well. So a lot of zeros in between. Again, a lot of times when we see some of this stuff that's getting controlled by geopolitical, you tend to see some of these other sectors go a little bit flat, as they don't want to bet one way or the other without really having a better understanding of what's going on. Obviously, energy here still being driven by the situation over in the Middle East. Wanting to next highlight our total sector AUM. This broke down through that 21-day moving average and has significantly been dropping. We've lost close to $15 billion over the last just 2 weeks here. As you can see here, steady decline in the S&P 500. This has been a pretty good indicator for us. We like it a little bit better than just using SPY, which can be, we use a little bit more for hedging and whatnot. So we're checking the AUM here, money flowing out of the 11 sector spiders, and overall seeing that correlate with the down price in the S&P 500. Again, we'll see what happens with Monday, obviously, again, we're up about 2% as per the taping of this, and seeing what kind of assets we see flowing back in. But right now, assets staying below that 21-day moving average, pointing in the wrong direction, along with the overall S&P 500. Headed into our rainbows. Wanted to highlight here communication services highlights our new bottom, driving from that neutral into a void, and showing that relative underperformance that we're seeing versus SPY. So, overall, I would say this is kind of a downtrend, really sideways move for communication services. After we attempted to come out of avoid into neutral, we got a little bit of relative performance that is now starting to back off as we have a relative resistance in this general area. So communication services is not a place to be. XLRE, again, we didn't see a whole lot of asset flows into XLRE, just kind of consistently in that favored mark. As you can see, we're a little bit sideways here. We would need to see some asset flows kind of really starting to rush in to real estate in order for this thing to really take off. This is kind of what the SEAF model does. If there isn't any sectors that are outwardly, pushing the limits or putting a lot of money inflows into, as we've seen with energy over the last since really January of this year, SEAF kind of trolls around to find what's the next best. And what happens, and the reason this is a good thing necessarily than a bad thing, I know it creates a little bit of churn, but the positive thing of this is we end up getting into trends early. So as money starts to collectively flow in, even if it's slow into a trickle, we can get into these trends early before they start to take off. I am not guaranteeing that real estate is going to take off. This is by no means a predictive model. We're tracking what these asset flows are doing, but again, as we start to try to cycle through some of these higher scores, so in this case, technology or real estate or even materials, as we start to kind of rotate through these, we get into these trends earlier, and that's how we pick out some of that outperformance, is being able to identify as money is slowly moving in, as the sectors start to rise from the middle bottom up to closer to the top. We start to look into that, and we get into those trends early. So again, while it's not a super high score, overall score of 15 here for real estate, it's a good place to be in the sense that we're getting in this trend early. If money starts to flow into real estate and this thing takes off, we're in it now. If it continues to go sideways and another sector starts to raise up in those asset flows, we'll get into that. This is in a very sped up sector rotation place. This model does a really good job of making sure we're in those sectors that are getting that money and getting out of those sectors that are not. So again, with some of the other sector rotation, not to name any names, but that we see, they transfer on the quarter or they transfer on the year or the half year, and they end up getting stuck in these sectors that maybe had a couple of months of outperformance, but now they have to sit through some underperformance as well. We stay in the trends that are relevant. And again, with the way geopolitics is, the way social media is, a lot of this investing moves really quickly. So the SEAF model does a really good job of staying in those fast-moving trends when we can. Looking at utilities, again, utilities is through Thursday, so you will notice there'll be some underperformance here for utilities as we track this next week. But as of the data through Thursday, utilities stayed in that upper favored, middle favored, and had some nice relative performance run. We'll see what it does this week. Again, we seem to be getting jerked around a little bit here by Washington in terms of mission accomplished, mission not accomplished. We need $200 billion to fight a war. The war is over, and I think that's creating a little bit of havoc in this investing space. So when I bring up the havoc, I want to bring up energy again. Energy has been really strong outperformance. We've been in it since January, even 2 months ahead of the war. We've seen some nice upper favor, but again, standard deviation in oil prices is up over 70%. This is a very volatile market that's very much being controlled by one man's voice and his ability to bend the truth, if not outright lie. And I just always want to be careful when markets are not being driven necessarily by, trend or fundamentals, but being driven by what's happening geopolitically and by, the words of a man that can change on a dime. So always just want to bring out the risk, as that's our job here, is to highlight, the money is still flowing into energy. Energy's had some really strong outperformance, but I really do want to make sure we understand the risk here, that, this could end at any moment depending on how things solve geopolitically. This is not similar to the AI trend or utilities, where we were seeing money flow in due to CapEx spending and to hype over a new technology, or hype into building our energy infrastructure. In the case of utilities, very much war driven here in the last month or so, that has taken energy to a new level. Last but not least, wanted to look at financials. Financials has been at the bottom the last month or so, and we seem to be trying to climb out. We don't know yet if this is going to be a relative bottom and the relative underperformance versus SPY, as this thing's been downtrending for quite a while. But we again saw some strength on the trading week. That is not indicative of this thing going up through favored. We were just out of a void. So just wanted to highlight seeing a little bit of a turnaround. You can see the slight turnaround, the relative outperformance versus SPY, but we've had this a few times. Tried to pick the bottom a couple of times here and have reverted back. So no lead off here, nothing to do yet with financials. Just wanted to highlight a little bit of that turnaround. Sometimes there's excitement on the trading week and we get questions, hey, money's flowing in the trading week. Why aren't we getting into that? We've had a lot of negative accumulation here for financials, and the money is not necessarily sticky. As we start to see these trends, kind of similar to what I mentioned with real estate and technology, as these things are starting to move around, some of this money flies in and it tries to see if it's going to catch. It's kind of like starting a new trend style with clothing. You try something unique, and if it catches, it runs and everybody's wearing it. But, sometimes it doesn't, and you end up looking a little bit crazy for a little bit with your dress wear. So that's a weird analogy here, but what I'm trying to state is when you have money flowing in, we want to see it start to spread over to multiple time periods, because that means that money is sticky and that idea is starting to catch on across the entire investment landscape, and not just some fresh money coming in and kind of testing the waters. And that's what we tend to see here. It's like going fishing. If nothing's biting, they move to another location. A lot of analogies here today. So that is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.